Hey guys, welcome to the weekly recap. We're going to have a little bit more in depth. This will be a little bit longer of a video. I go over some more projections of where I think we're going now based off how we traded this week. Just looking at the actual 15-minute chart right here, intraday. The bulls finally came back and just smoked everything. This is kind of what I was expecting yesterday. As you see, we came out in the morning and we were heavily bullish. We were riding that, and I was expecting a bounce here to continue up, and this is where I got burnt on those calls. And then here I expected us to recover and go back up just like we did right here. Almost this morning exactly was what I was expecting yesterday, but I was a day early on the bull run apparently. So just kind of how it is. Kind of interesting day today. If you were trading, the IV rank was very weird today. Usually on a bullish day, the IV rank will go down and will be less than the day before. However, for some reason today, the IV rank was actually a couple points higher than it was yesterday. You don't usually see that on a bear or bullish day. Usually on a bear day you would see that. So that kind of did throw me off a little bit in the morning. I think IV rank at close yesterday was around 34 or 35, which also is weird because obviously we sold off yesterday. And then today when we opened it was 39. I saw it get as low as 36 and it closed around 38. So that's kind of interesting. The IV rank shouldn't be that high on a bear day. Obviously, I'm not like a super guru on the IV rank, but that's just like something I do watch every now and then. But I was also noticing premiums were moving kind of goofy today. That quite a few people in the server mentioned that they were trading 0 DTEs today and that they felt more like 7 DTEs. They just weren't moving. I did take one put scalp in the middle of the day, and that didn't pay very good for the movement that it got. And then after that, I was looking around in this time right here. I was expecting us to at least retest the 8 EMA, but we just rode the 5 EMA all day long. But here I was watching a put from pretty much here at 12:15 until basically after 1 o'clock, so almost an hour, 45 minutes to an hour. I watched the same put, and it never lost value. And it actually, as this started to go up right here, it gained value. So that was kind of different. Usually, obviously, if a SPY is going up, the put's not going up at the same time. So that was kind of weird today. Not really sure what to make of that, to be completely honest. So let's take a look here at the daily chart. Not a lot going on, but not a lot at the same time. So the bulls obviously had a great day today. They managed to get us up to this 427 level. This was a level I called out last night in the TA that I thought we could hit this black dotted line, and we nailed it right on the dot. Some interesting things about where we're at right now on SPY is that we are past the 50% retracement. So this is like if you were to take the all-time high and the 52-week low that we're at right now, divide in two and find the middle, it would give you 421.08. That's the 50% retracement. Apparently, I'm not obviously versed in all bear markets and exactly how they move, but apparently most bear markets on a bear market rally will not break the 50 retracement, which is interesting because obviously right here we rejected it pretty good, and right here we broke out of it and then dumped and closed below it. But now we're obviously way above that. So I heard some analysis people on CNBC today talking about that, and they were kind of also perplexed. Another interesting thing about this market rally right now for SPY is that most of the pops are about 10 to 12% total, and then you'll see the next sell-off. However, currently we are at a 17.9% rise as of close today. So obviously that's almost double what we're supposed to be at. I wonder if we're going to get to about 20% before we correct, which would put us over this 430 level here. And then somebody else today in the group, they posted a chart with the Fibonacci's. I don't really love Fibonacci's, but I do understand their value. I used to use it on crypto a lot back in the day, but I haven't used it in a while. But the 50 Fibonacci was around that 420 level, and the 60, the 0.6 retracement is at 434, which is interesting because 434 is right here, and that puts it pretty close to this bear market resistance line, and also where all these rising wedges kind of form together. So that's going to be something kind of interesting to watch as the week goes on, to see what we do in these 430s here. So major resistance that I'm watching, I'm going to zoom out here first, so just to kind of give you an overall picture here. So you can see these thick green lines right here. This is the 2022 bear market, essentially. Technically, it started back here in July last year, because we did trade up, but it was kind of sideways actually. But taking the peak of January 4th, 2022, and the March rally, March 29th, 2022, you get this nice green line right here. So it gives us a resistance line for Monday at 432.4. That resistance is what I call the end of the bear market. So obviously that's not a very big move up from here. That's pretty close. That's only $6, so about a 1.5% move. If we break this line, obviously it's not 100% saying the bear market's over, we're back in the bull market, but it's breaking the lower highs. So we could get something like we see here back in January, where we were in this downtrend right here, and then we broke, but then we double topped it. So we could break through. We could go up for a double top here at this 462 level. This 458 level has been a really big resistance level also. And right here at 430, 429, that's a pretty big level too to keep an eye on. So a lot of places we can go from here, which is interesting. But if we break through here also on the daily, it's more easy to see on the weekly, and I'll talk about it when we get there. But we kind of have this huge breakdown triangle. So if we reject here, we could be seeing a retracement back down into 390s, 400s. So something to keep an eye on as time goes on. But major resistances, like I said, is Monday is 432.2. Tuesday, if we happen to have like a retracement day, looking at 432, 431.9. I'll be keeping an eye on this green line all week, and I'll be talking about it. Once we break through there, like I said, there's a lot of places we can go, but the most likely place, if the bull momentum continues, will be 458. That would be the next major level I'm looking for. In between here is just kind of a lot of noise. We didn't spend a ton of time trading in here. We've kind of like just seen big moves throughout it. So kind of just see what happens from there. Support wise though, we have these huge rising wedges. As you can see, I mean, they're about as steep as you ever want them, especially this black dotted one that we're in right now. It's massive. So support for that on Monday is going to be 424.7, which is just about the high of yesterday's candle. So that'll be an interesting level that we could see a bounce at. From there, we're looking down here on Tuesday. If we see a bigger retracement, 421.7, that's this overall just bullish 9 weeks of movement right here. Something to keep an eye on. My major levels that I have for this week is here at 429.4 and support down here at 417.5. The 200 EMA is down here, so that's important to watch. Something to keep an eye on too is all these EMAs right here, they're starting to cross over. So you can see the 8 EMA is actually going to on Monday be crossed over the 200 EMA, which we have not seen that happen since back in the April rally. And interesting enough, in the March rally, we had the 8 EMA down here, and then it popped up about halfway through the run. So obviously it was a different time because we weren't that far under it. I would almost consider it more with the 100 EMA, so something to keep an eye on. But we have that one crossing over. We have this blue one right here, which is the 20 EMA. That's about to cross the 100. And the 50 EMA is closely in pursuit. So if we continue bullishly, by end of next week, we might even have the 50 back over the 100, which would be kind of interesting to see. Like I said before, I think the bottom is in. I don't think we go below 460. I mean, 462 is what we're at right now, but with, air, I think 360, I don't think we're going to break that. I don't think we see the 350s this year. But I would be shocked to not see all these gap fills. So we have this gap right here down to 412.75. We have this one right here at 378.57 and this tiny one down here at 369.4. I would be extremely shocked to see 3 gaps left on this chart. Now, when will they fill? That's the big question. There's some people are talking that we might go see all-time highs first and have some sort of major crash. I can't remember exactly what bear market it was, but back in I think like the 20s or something like that, one of the worst bear markets apparently, it actually did that. It retraced to all-time highs, and then from all-time highs it dumped. Don't quote me on the 20s. I briefly heard it in passing on the news, and it was something interesting. But so just something to think about where we're going. So the weekly is much cleaner, much easier to see kind of the overall trend. So we have this rising wedge that we're in right now. As you can see, we're about the top. So we also have this dark black bull channel. So we perfectly rejected the resistance line today. So next week, we're going to be looking right here at 432.4, which as you can see, this is that breakdown triangle I was talking about, the blue support line and the green resistance line. It's perfectly in line right here at 432.4 with not only the weekly level, also the bear resistance line. So 432.5, that is going to be the key number that everybody should be keeping their eyes on Monday, Tuesday, Wednesday, whatever day we finally get to it. If we hard reject there, I would be surprised to not see that be the top. If we break through it, like I said, I'm looking for 454, 458 levels. So weekly wise, it looks like 454 would be the next level that we would go for. So in the chance that we do reject it or that we don't even test it and we double top here at 427, support to watch is 419 level. We break through this 9-week long bull channel, and I think we would finally obviously see the sell off. That would be a nice double top put in here. So we haven't really had a nice double top. This is about the nicest double top we've had, but they had some pretty long wicks. But we haven't had a true. Let's see if we have a good example here that would help me or show you what I'm talking about. Kind of like here, this is what I'd be looking for. This nice double top and then a drop down is kind of what could be setting up right here at this 427 level. Something to keep an eye on. Futures, same thing. We have the huge bull channel or bear channel right here, and then obviously our massive rising wedges. So levels to watch for futures. Monday, key support resistance is going to be 42.95, and Monday, Tuesday, we're looking at 43.38, and on Tuesday looking at 43.35 for the bear market resistance line. Support wise, so we have this massive black resistance or rising wedge right here. You can see that we're in. It's kind of got the support here and the resistance here. Monday's support for that is 42.50, and Monday's 9-week long bull support is about 41.77, or on Tuesday looking at closer to 4,200 really. Something to keep an eye on. And then we have the weekly, same exact thing. I mean, this looks like the weeklies look identical now. There's a while down here where they weren't looking very close, but now they look pretty much identical. Same thing, we got a nice rejection here in the rising wedge. Support, it's the exact same thing, or resistance, the exact same thing this week. 40, I call it just 44, or 43.40 is our resistance. So that's the level to keep an eye on. I would doubt that futures will do it on Sunday night, but we've seen crazier things. So if we see some massive run, we could be looking at that. But support is down here at 41.92. So same thing, if we break through this, I'm looking for the next rejection at 43.88. So Apple is just, it's pretty mind-boggling. Let me scroll down to my document here so I can throw some numbers at you guys here. Did a little research. So currently Apple is only 6.29% from its all-time high, which is kind of crazy to think about, the fact that we're in a bear market and Apple's almost back to its all-time highs. I mean, that's 2 days of trading if you have 2 good days. 1.5, really 2 days that Apple could get to all-time highs if it wanted to. So from July 13th to July 22nd is basically this bull run from, June 13th is right here to July 22nd right here is kind of like run number 1 that we went on. So you can see we started here, and you could kind of call this the bottom, but just saying this is when we first got into it. So you got here to here. You can see that we have this like nice bull channel, but then we kind of start here on July 26th to here, and you can see things have really accelerated. I mean, this is like normal. I can understand this sort of like up and down, up and down, up and down, but now we're just like facelifting. It's just melting up. So for a comparison, from July 26th, I was talking about over 13 trading days, Apple has now gone up 12.3%. For this June 13th to July 21st top, that was 13.6% over 24 days. So Apple has nearly covered the same ground in half the amount of time. In total, if you start here at the bottom and go to the top, Apple over 37 trading days has rose almost 26 total percent. That's a crazy amount. One in a bear market, which I guess bear market rallies are some of the craziest out there, but I mean, that's just wild. So just for some comparisons, in this March rally back here, the March 14th to March 30th, Apple did rally 19.6% over 12 days though. So technically it is more aggressive over a short period of time. I mean, we obviously put nothing but green days in here, but this is the most aggressive rally sustained over a period over 37 days now that we've seen this year. I was comparing the sizes of this to the past, and currently like this run that we're on right now, this 25.9% over 37 trading days, is the biggest, fastest, and greatest distance covered since October of 2021, and the only rally that is even comparable to this size, it was from July 2020 to September 2020. And just so you see what I'm seeing, let's find those days. July. So here I'm talking about rallying from here to here is about the same exact amount of distance and time that Apple currently has done. And you can see what happened once it finally found that top. And this is 2020. It just dumped, crashed. Now we're going to get these negative 8%, 2%, 6, 7, 8% days. Probably not. But it's interesting to see that over a crazy run like that, what Apple did in the past. So some key things to watch. We'll zoom out here. So this is the same thing as the green solid lines on SPY. I just have Apple in a actual gray channel just because I don't trade Apple as much, so the green lines are easier for me to do more on SPY than Apple. So here we are. We have this gray resistance line. So this is Apple's bear market essentially, which is equivalent to SPY's 434. So for Monday, that means that if Apple hits 174.7, which is about $2.50 from close, which should be about a 1.75 to 2% day, which is nothing for Apple, it's breaking its resistance for the bear market. And I would be shocked to not see it go to 180 or 183 is the high, all-time high. So you can see, like I was saying, with this acceleration of this black resistance or rising wedge right here, that resistance for Monday is right here at 174 and support is at 171.8. I wouldn't be surprised to see this support broken on Monday. I'd be pretty impressed to see Apple just straight up face melt again on Monday. So I wouldn't be surprised to break this. So we're really looking at Monday at 168.3, but really Tuesday, because we're not going to drop that much, 169.3. And then we have support later in the week down here at like 168 to 168.8 for this is the overall 9-week long now bull channel. So this is kind of like this solid red line right here and this black dotted really do make a bull channel. But I'm just using this for this rising wedge resistance right here to make it easier for you guys to see. And then we have the weekly. I mean, this is a crazy, but just massive rip that it's on right now. It perfectly stopped at the weekly resistance right here at 172. So to Monday next week, the 174.5, that will be the weekly level resistance to break out of basically the bear market. And then from there, just weekly resistance, I'm looking at 177. Support, if we were to happen to drop down, I'm looking at like 166. So something to keep an eye on. The VIX is pretty interesting today and yesterday, really all the last 3 days. So I talked about on Wednesday that the VIX perfectly rejected 19.5 and that was that median level from 2021 right here. And we're still in this nice falling wedge. And we've bounced off this, let's see, 1, 2, 3, 4, 5 times now. So this is a pretty strong support area, this line right here that we've been trending down on. Yesterday we saw that 19.7 level hold. Today we finally saw an unwind down to 19.1, bounce there though, which was interesting because it had dropped early in the morning, I believe it was. I'd have to go back and double check, but sometime in the middle of the morning-ish it had dropped, and by end of day the VIX actually was rising. So while SPY was still going up, the VIX was rising, which, I mean, they're not perfectly correlated, but you don't usually see a rise in the VIX. But with the low volatility, because we're down in the 19s now, the VIX and SPY I don't suspect to be like 100%. Like when we're up here and we're face melting up on VIX, obviously SPY is going to be dumping. But when we get down here, they're not as correlated. Really below like 25.5, 26, I've found that they're not greatly correlated to be able to trade the VIX and the SPY side by side. I used to rely on pretty heavily the VIX to kind of give me a direction of what SPY is doing that day. But like I said, once you drop below 26, I found that it's not really helpful anymore. So I don't even watch the VIX anymore. If we see the VIX get back up in 26s, I will definitely be putting it back on my charts to be keeping an eye on it. So things to keep an eye on for next week. Monday is this 18.9. If we happen to break through this support line right here finally, then we could be looking down here at 18.3. But the one thing I'm really looking for next week is the perfect storm for a time to go long on puts. So things that I need to see happen before I would consider going long on puts. I want to see 433 tested. This, what did I say? 430. It was called 433. I want to see that tested. If it rejects 433 and Apple rejects here. Actually, I don't really care about Apple. So let's just say SPY, because SPY is really going to be more important. But Apple will be the good first guidance. So if Apple starts trending down, that'll be part of it. So SPY hitting 433, and it can go over it. I'm okay if it breaks over it, as long as we're not in like the 440s. If we're hitting like 433 to 435, we see Apple hit the 174s, maybe even 175, and start trending down. The important part is Apple is trending down. So once it goes up, that's fine. But we have to see at least like 2 red days in a row. So I don't want to see like this sort of redness where it's, 0.28%, 0.19. I want to see red like back here, like when we got to the top, 0.66, -2, almost 2% day, -2% day, -2% day. Like I want to see a bigger red day. I don't want to just see like a little 0.3. Same thing with SPY. Like I want to see a big red day, like this 0.0 stuff that happened. I mean, 0.12, 0.4, 0.1. That's not bad. I want to see a bigger red day. Two of those in a row, and I want to see the VIX minimally over 23, preferably closer to 24. If we have all those, that would be at least 2, maybe 3 days of the VIX going up. Could happen. We could just see something like this, though. This was back in. This is the March top of the VIX, by the way. So this was the March rally. The VIX just dumped. It found support, and then it went up. So we're going to see sideways movement, most likely on the VIX first. So no more trending down. We're not going to make any more lows. We're just going to trend. We're going to break the ADMA. So this would be like if we just hold this 19.19, we'll call it level, and we just sideways burn here. So by like Wednesday or Thursday, if we're breaking the ADMA, we're over 21, and especially if we're close to 22, And like I said, SPY has hit 433, Apple's hit 175, and both SPY and Apple are having at least 1 or 2 red days in a row. Good red days too. I would consider going long on some puts. So if you look at SPY in its previous drops here, so we have, I'm just reading my stuff real quick here so I can give you guys the right numbers. In this June drop from here to here, we had a 13% drop over 8 days. And if you take the March drop to April's bottom right here, or May's bottom right here, over 15, I guess it'd be right here, I'm sorry. So over from here to here, over 15 days, we had a 17% drop. And then in February, which is this top right here to right here, we had a 10-day drop over 11.5%. And even in January, from here to here, we had a 13-day 14% drop. So on average, I didn't actually factor this one to here in. I probably should have, but it's okay. On average, for those big drops, it is a 13.88% average over about 11.5 days. So call it 14% over 12 days. So if SPY were to hit 435 on, let's say, Tuesday, to be conservative, it gives us, here's Monday, here's Tuesday, so SPY hits 435 right here. We would see, so that's August 16th, we would see a almost 14% drop by September 1st, which puts us, September 1st is right here, and 14% puts us all the way down here at 174.6, right about here. Look at that, right at my support line. Now the cool thing about this, so remember right here, let me put it like an arrow right there so we can focus on that. So right here. So this is the trajectory we could potentially go on. Now remember, this would have to be a big sell-off too. We would fill 1 gap, 2 gap, and we would be right above this 3rd gap. Remember this 369.38 gap? I'm not convinced that's going to fill because it's only like $1. Not even $1. It's like 70 cents. I'm not 60 cents, 62 cents. I'm not convinced that one's going to fill. So if come Tuesday the perfect storm is setting in, we hit 435-ish, and we by Thursday are closing under 429, kind of trending back down here, and Apple has gone up here and it's starting to close back down here under 174 on like Thursday or Friday, and the VIX is trended sideways and we're sitting about here, I would be 100% prepared to buy some 30 to 60 DTE puts. Now if you want to be risky, 30 DTE would be the way to go. That 12% drop would give you about a 1400% return if you did a decently out of the money put. At the money obviously would return much less, probably closer to like 700%. You did a 60 DTE, which this would buy you a lot of time in case we're off on the timing or the percent drop. That 60 DTE would give you 478% on an out of the money put, probably closer to like 200% on an in the money put. So I think that's a pretty solid play, and that's what I'm going to be playing. One thing to keep in mind for Friday is monthly options expiration on the 19th. Currently, I haven't looked at them in a while. I can try to pull it up real quick while we're doing it though to see how heavily people are jacked up on the bottom down here. I haven't looked at this in a while, so let me compare to my numbers previously. So I've been watching these numbers on the 19th. When this month opened, the lower side, we were from the 330 puts to 370 puts. Everything was about 110 to 200K OI. And when you looked at the calls, the like 445s to 410s, it was barely 30K. People were unbelievably leveraged to the downside. So I'm looking at them currently right now. You can't see them just because of the way my recording works, but I'm going to pull up to see where we're looking here at like this 380s. So 380s have increased. So it was the last time I looked at 85K, and it's now at 110K. So even the 360s are right around 120K right now. 400s puts are at 115K. So there's a ton of puts down below. But if you look at the calls, I mean, there's not a ton of calls. I mean, let's see here. 430 calls, there's only 45K. 440 calls, 33K. 450 calls, 20K. I mean, even if you go way in the money, I mean, 420 calls, there's only 40K. 24K for 405 calls. 40K for 400 calls. I mean, people are jacked, unbelievable to the downside right now. I mean, every like 10 strikes down is 120, 150, 180K. I mean, shoot, even down to 330, there's 112K OI. So my thoughts of what's going to happen is Friday, we're going to get the expiration, monthly expiration. I think we're going to see all those puts come off the books finally. We'll probably get a pretty big face melter, and that'll be the time to go long on puts. So my goal Friday night would be, if everything sets up perfectly like I've been explaining, to go long on puts. Probably would go the 30 DTE for the risk to reward, because obviously, you know, if we drop 5%, 10%, I'm still going to get a nice payday. And if I see that we're not going to be blowing through like 405 or whatever, I can cut my losses pretty quickly and still have a nice profit. With 60 DTE, I feel like I'm going to, you know, get closer. It'll be safer, obviously, if we kind of slowly drop down, but most likely be going with the 30s. So alright guys, well that's it for the video. I will be back on Monday, and we'll try to have a great week next week. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month, or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.